Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to be looking at the weekly Forex forecast for the coming week. We're going to start from the dollar index. This is the monthly time frame. So clearly we identify the bearish fair value gap here from last year, and we can see how price fully mitigated that. And what we can see is the month of January gave us this indecision candle after the full mitigation of this fair value gap. And we can see again further that the month of February traded into this sponsorship level, which in the lower time frame, in the weekly time frame, we identify the weekly bearish breakout block and also the daily bearish order block, where price was really facing resistance at, and then we had bearish movement to the downside. Looking at the monthly bullish fair value gap as our drawn liquidity, the internal range liquidity, and clearly here we can see that the month of February gave us that bearish movement, took out the low of the month of January, because you can see the month of January gave us indecision candle, took out this buy side liquidity of the month of December, fully mitigating the fair value gap. So clearly we anticipated a fall to the downside. Now we were looking forward to see how the possibility of price delivering more lower into the monthly fair value gap. But what we can see here is how price fell to the downside, but now volume just closed above the previous month's low points. Now we can see that volume has not yet traded above the open price of the year 2025. So we can see this is the open price and volume have been trading below it. So this is the likely possibility of price trying to trade into a discount PDRA before we have the bullish movement of price to the upside to take out this internal range buy side liquidity and in extension the external range buy side liquidity. So let's look at the weekly time frame. So here in the weekly time frame, you can clearly see the weekly bearish breakout block, and within this fair value gap in the weekly time frame, in the daily time frame, what we're going to see is the daily bearish order block. And clearly here we can see how price reacted at the confluence of those two sponsorship candle zones, and we had the fall of price back into this weekly fair value gap, the bullish fair value gap here. And then we had this for the bullish movement when price was failing to close below the consequent encroachment. So I told us to expect bullish movement again to the upside with a possibility of seeing price taking out the buy side. But clearly here price did not take out the buy side liquidity. Price mitigated this rejection block, and then we had the fall of price to the downside. You can see when we had this candle closing below the weekly bullish fair value gap, I told us to anticipate the retest, and that is going to serve as an inversion fair value gap so that we can look forward to bearish movement to the downside into the monthly fair value gap, which is the draw on liquidity we identify from the monthly time frame. Looking at it from the weekly time frame, we had this sell side liquidity, but now what we can see is how this week actually traded to the downside but then failed to take out the low with volume closing below. We just have the candle week taking out this previous weekly candle low point, but volume failed to close below, though we saw that price mitigated the weekly inversion fair value gap. So what we can see happened the previous week, which is just the week that just ended, we can clearly see that price again took out sell side liquidity. But now what we have is that volume closed above the high of this bearish weekly colored candle. And what we can see again is volume also closed above the consequent encroachment of this weekly inversion fair value gap. So we could see the possibility of a bullish movement to the upside. Price may return back into the open price, the 2025 open price. And what we can see is we have this fair value gap here in the weekly time frame, though we can see this candle mitigated that with the week, but then volume did not really remain within the fair value gap, and we also had the bearish movements. So we could see price further push to the upside. So if we see that movement from a lower time frame, then we could trade to the upside. We could anticipate bullish movement in the dollar index. So let's check the daily time frame. So here in the daily time frame, what we can clearly see is from the daily time frame, price return into this daily bullish fair value gap. We can see that this candle took out this low point, took out sell side liquidity, sponsored bullish movement to the upside, taking out this external buy side liquidity. Now we have this as an engineered liquidity. We have this liquidity pool here. We can see how price dipped to the downside, mitigated this decisional point of interest. We had bullish movements. Now price dropped to the downside, took out this engineered liquidity, mitigated this daily bullish fair value gap. In confidence, we have this unmitigated week that price dipped more lower to mitigate. And now we're seeing this bullish movement to the upside. So you know, from the higher time frame, the monthly time frame, the drawn liquidity is the monthly bullish fair value gap. But what we can see from the lower time frame, we can see how price took out this liquidity pool, took out also this liquidity. So we can see now bullish momentum to the upside, leading here to a market structure shift. You know, last week I told us if we're going to continue bearish to the downside to take out the sell side liquidity, we are looking forward to see price return to the upside, mitigate this fair value gap we identified, because this was Friday's candle. So I told us to anticipate how price would mitigate this fair value gap, and then we have bearish continuation to the downside. So what we can see is price return, mitigated the fair value gap, give us the bearish movements, but price now reacted at the daily bullish fair value gap we saw here. We had the reaction at the daily bearish fair value gap, price movement to the downside. Price failed to give us an impulsive continuation to the downside to trade below this daily bullish fair value gap, aiming at the sell side liquidity. And now we can see bullish momentum to the upside. So now clearly now I told us that if price failed to react here, then we should look forward to how price would return to take out this as an inducement liquidity, react at this fair value gap and give us the bearish fall. But what we can see is that price gave us that reaction here, give us the bearish movements. Now price reversed to the upside, leading to a change in state of delivery. And in extension, we can see here we have this internal market structure shift. So now we can see here that volume here actually is above the consequent encroachment of this bearish fair value gap. So what I'll be waiting for clearly is, if you want to take a bearish movement to the downside, then you should be looking forward to see how price would drop to the downside into this fair value gap. So you can see we also have a bullish fair value gap here. From this candle low points to this candle high points, in confidence we have this daily inversion fair value gap now. So we can see the possibility of price dropping here. So you have to wait and not really aim towards price continuing just bearish to the downside into the monthly fair value gap. So we could see a rejection here that would sponsor bullish movement to the upside. So given this fair value gap in the daily time frame to act as an inversion fair value gap. So we could see that act as an inversion fair value gap and sponsor bullish push to the upside. So basically we have to wait to see if you're framing bearish movement, then you want to see how price trades into this bullish fair value gap, which in confidence we have this inversion fair value gap. Here we have a change in state of delivery, because we can see volume here close above this bullish colored candle here. We can see how volume close. Furthermore, movement leading to this internal market structure shift. So we can wait to see how price return to the downside into this sponsorship zone, the bullish fair value gap. In confidence, we have this inversion fair value gap. And then we can see if we're going to continue bearish, or we could see price give us that bullish continuation to the upside, since we're seeing bullish momentum to the upside. So clearly now we're looking forward to just this expectation. Let's check the 4-hour time frame. So here in the 4-hour time frame, so we can see clearly here we have a bearish order block where price is reacting at currently. So we could see price drop to the downside. So basically, just the way I pointed out from the daily time frame, we'll be looking forward to the possibility of how price dips into this zone. So we have to wait. If you're targeting where you want to take your profit, then look to this zone and not really want to trade down to see how the sell side liquidity will be rated. So we would look forward to this, because price may give us a reversal at this point to give us a bullish movement to the upside. So this is clearly what I'll be observing to see. If price then successfully takes out this zone, this fair value gap, then we know that price now will be aiming for the sell side liquidity into the monthly fair value gap. So clearly this is what I have to show us in the dollar index, guys. So let's check out the EURUSD pair. This is EURUSD and this is the monthly time frame. So we can see we have this monthly bullish fair value gap and we have the monthly bearish fair value gap. And just like the dollar index, we can also see an indecision candle here in the month of January when price mitigated this monthly fair value gap here in the monthly time frame. So we can see price also gave us this indecision candle. The next, also in the month of February, we can see we also had bullish movements, bearish movements. So we do not have volume in the month of February, looking at the monthly time frame. So basically we have the equal movement of the buyers and the sellers. So clearly now what we can see is, I told us that if we were expecting to see bullishness when we saw this indecision candle in the month of January, this was our drawn liquidity, and then we could frame bearish continuation from this bearish monthly fair value gap. So what we can see again, price gave us this indecision candle, failing to take out this high, failing to take out the low. So from the monthly time frame, we do not really have a clear perspective. But then if the dollar index is going to go bullish, then we should expect to see price falls into the monthly fair value gap we have here. So let's check the weekly time frame. In the weekly time frame, what we can clearly see is in confluence, we can see we have the fair value gap also here in the weekly time frame. We also have the monthly fair value gap, the bearish monthly fair value gap redefined here in the weekly time frame. So what we can see clearly is price is in a bearish momentum, bearish structure to the downside. And, last few weeks, I called our attention to the open close price here, which in the lower time frame also identify a rejection block, or you can call that a bearish order block, whatever you want to call it. So, we saw how price was just reacting there, failing to take that out. So upon this bullish momentum, we look forward to see how price will take out this buy side liquidity, but then we can see clearly price failed to take out the buy side liquidity. So on Wednesday, Thursday, we started seeing bearish momentum, which I wasn't really expecting for that to happen. And now we saw bearish momentum now back to the downside. So we have this rejection block here. So we'll be looking forward to see how price dips into the rejection block. If price violates this rejection block, then we know we have the sell side liquidities resting here and the monthly fair value gap as a drawn liquidity. But here we have this liquidity pool. So clearly we just have to wait to see how price reacts here. And let's check the daily time frame to have a better perspective to that. So from the daily time frame, what we can clearly see in the daily time frame is this. This is the open close price from the weekly time frame. Here we have this rejection block. We can see how price return. Structure is bearish. Price took out buy side, gave us the impulse, broke structure to the downside. Return took out this internal liquidities. Price reacted at this decisional point of interest because this is going to serve as the extreme point of interest. Price reacted, fell, but failed to take out the sell side liquidity, and we saw this bullish return. So we can see how price reacted at this rejection block, gave the bearish movements, failed to take out the sell side. Price return again, reacting at the newly created rejection block in confluence to this rejection block that price have retested. Now we can see price retesting it again the second time. Now what I caught our attention to in the video I shared on Friday was how I saw price failing to take out the consequent encroachments of this candle week. And then we saw from Wednesday how we started having bearish movement to the downside, failing to take out the buy side liquidity I was looking forward to. And now we saw how price gave us the bearish movement, leading to a change in state of delivery. And here we have this bearish fair value gap. So I'm anticipating to see how price would trade to take out Friday high, the mitigation within the bearish fair value gap in confluence to the bearish breakout block, because this is the last down close candle that gave us the bullish movement that took out this buy side liquidity. So I'll be waiting to see how price reacts within this zone, and then we have bearish movements to this weekly rejection block, which here in the daily time frame we can see we have this daily bullish order block and this unmitigated candle wick. So the reaction of price here will determine if we're going to go bullish or we would see price continue bearish to the downside to take out the sell side liquidity. So let's check the 4-hour time frame. I'm not going to drop any time frame lower than the 4-hour. This is just a quick forecast I'm giving us. So we can see here from the 4-hour time frame, our rejection block zone, we can see how price printed this movement, this price facing resistance at the rejection block zone, and now we had the bearish move. So we have stack of buy side liquidity here, but then we can see bearish impulse to the downside. Now clearly we can see price reacting at the 4-hour bullish order block. So that is why from the daily time frame, I told us we could see how price return into the zone, and then we frame bearish fall to the weekly rejection block, which in the daily time frame we saw we have the bullish order block in confluence on unmitigated bullish week. So we could see how price return into this bearish fair value gap, and then we have the fall. You can also see in the 4-hour time frame we have this bearish fair value gap, and price now is reacting at the 4-hour bullish order block. So from the 4-hour time frame, we'll clearly see that we have the possibility of price really violating the rejection block zone and then aiming lower to the downside. But then let's just look at this delivery when price begins to get delivered once the market open. So we'll clearly see how price reacts here so that we can frame bearishness to this particular price level, and we would look forward to see the reaction of price here to help us determine the bearishness, or we could see bullish movement. But this is what clearly I'll be looking forward to in the Euro USD. So let's check out the GU. This is GBPUSD, guys. So what we can see from the monthly time frame, we can see how price reacted at this rejection block zone, and we can see here volume failed to close below this low, took out sell side liquidity, and we had this bullishness to the upside. And we know we identified this down close candle before this bullish movement to the upside that took out this high point. So clearly now we can see that is where price is reacting at. You know, I called our attention. I told us if price violates this sponsorship candle, then we'll look forward to see price pushed into this bearish fair value gap here in the monthly time frame. So clearly now what we can see is the sweep of the sell side, the bullishness, but then price now is reacting at the sponsorship zone. We can consider this to be our breaker because this is the down close candle before the bullish movement that took out this high point, and now we had bearishness to the downside. Price reacting at this rejection block gave us this bullishness back to the upside. Price facing reaction at this sponsorship candle. So let's check the weekly time frame. Here in the weekly time frame, what we can see is the bullishness here. We can see price give us this candle, took out this low point, volume closed below that, but then price gave us bullish impulse and volume closed above. So you know, we started framing what bullishness to the upside because we had this inversion fair value gap in confluence to this bullish fair value gap, and we can see how price gave us bullishness to the upside into the monthly zone we identified, the breaker zone. And because, you know, I caught our attention to this unmitigated candle week here in the weekly time frame. So now what we can clearly see is the reaction of price at this candle week, which is the breaker zone from the monthly time frame. So now we can see the sweep of buy side, volume closed below, and now what we can see, price dipped into this bullish fair value gap. So you know, I told us to see if price was going to continue bullish, how price will fall into this bullish fair value gap, and we continue bullish to the upside, but then price went bullish before falling to the downside back into the weekly fair value gap. So from the daily time frame, what we can clearly see is here we have that weekly bullish fair value gap. You can see now price fell into that, and we can see how price returned back to the upside. Volume not really staying within the weekly fair value gap. So clearly from the weekly time frame, let's get back to the weekly time frame. If you're looking forward to see how price dips to the downside, they'll be looking forward to see price return to the downside to this down close candle before the bullish movement we had here. So let's get to the daily time frame. In confluence in the daily time frame, what you can clearly identify, we have this bullish fair value gap here. So I'm expecting to see here we have a change in state of delivery. We had, this is the down close candle that sponsored bullishness, took out buy side liquidity, and we had bearishness that took out this candle. So we have a change in state of delivery here. Price reacting at the weekly bullish fair value gap. Price have printed a bearish fair value gap here in the daily time frame. So clearly I'll be expecting to see how price is gonna trade into this fair value gap, Then I'll be looking forward to structural perspective to entry models, and they'll be looking forward to how to trade price to the downside into this daily bullish fair value gap we're seeing here in the daily time frame. So let's check the 4-hour time frame. Here in the 4-hour time frame, what we can see is within the weekly bullish fair value gap, we have this bullish order block. Price return again to mitigate this, and now we can see price giving us a rejection. So that is why from the daily time frame, I said we could see how price takes movement back to the upside here, and then we could look forward to bearishness. So you can see in confluence to the zone we identify from the weekly time frame. Here you can see we have this bullish order block, and we have this unmitigated candle wick also. So we could see price push to the upside. Since price is reacting at this bullish order block, price took out this sell side liquidity. So we could see price push to the upside to take out this buy side liquidity, mitigating the fair value gap we identify from the daily time frame, which in confluence we can also see this is the low point, the swing low that sponsored the bullishness that took out this high. So we have a breaker here. So you could see the mitigation, and then price continues to the downside into the sponsorship zone here in the 4-hour time frame, which we marked out from the weekly time frame. So this is what I have to show us, guys, in the GBPUSD. So let's check out the AUDUSD. This is AUDUSD, and clearly we can see AUDUSD from the monthly time frame is giving us strong bearishness. We had the monthly bearish fair value gap here, how price return here in the month of February. We can see the rejection to the downside here. So let's check the weekly time frame, guys. So what we can see from the weekly time frame, clearly we can see how price reacted within the monthly bearish fair value gap. We can see the sweep of this candle high points, buy side liquidity taken, and now we can see price give us this movement to the downside, volume closing below this high, and now we see this bearishness. So price has been attracted to the sell side liquidity from the weekly time frame. So let's check the daily time frame. So here in the daily time frame, what we can see is within the monthly fair value gap, we can see clearly price reacted at this bearish order block. You know, last week I called our attention to this candle wick, how price, we look forward to see how price was going to mitigate the mean threshold of this, which we can see price mitigated the mean threshold of this. That was last 2 weeks I pointed that to us, and now we can see the bearishness to the downside. So, you know, I told us if we are going to continue bullish, we'll look forward to see how price was going to trade bullish from this bullish order block, and we have bullish continuation. But then what we can see is that now price have violated that. So I'm looking forward to see in the AUDUSD, I'm looking forward to see how price is going to trade to this particular sponsorship zone. We have this order block that was violated, and we have the fair value gap, and then we can see the bearishness to the downside here in the AUDUSD. Let's check the 4-hour time frame, guys. So in the 4-hour time frame, what we can clearly see is price is reacting at this bullish order block at the mean threshold. Price have mitigated the mean threshold, and we can see how volume closed above the mean threshold. Back to the daily, let's make this annotation appear in the 4-hour time frame so that you can clearly see that also from the 4-hour time frame. So let's get back to the 4-hour time frame. So here in the 4-hour time frame, basically now, if price is going to respect this bullish order block in the AUDUSD, they'll be looking forward to see how price will trade to the upside. And clearly here we have within the fair value gap, we have this bearish order block. So we could see how price would trade into this zone, and then we have the bearish continuation to the downside to the sell side liquidity. Let's get back to the daily time frame to reduce the noise. So here in the daily time frame, we can see that in confluence to the fair value gap we have here, clearly we can see that we have this down close candle that sponsored this bullish movement that took out this high point, took out this bearish order block. Now we can see bearishness to the downside. So I'm looking forward to see within this week in the 4-hour time frame, we have the bullish order block. I'm looking forward to see how we could see bullishness into the fair value gap here, which is in confluence to this bullish order block that was violated to the downside, and then we can see price continuation to the downside to take out the sell side liquidity. So this is my expectation for the AUDUSD also. So let's check out the NZDUSD pair, guys. Here also we have the NZDUSD. We had the monthly bearish fair value gap. The month of February traded into that, respected the mean threshold, the consequent encroachment. We can see the rejection to the downside. So we're looking forward to see how price takes out the sell side liquidity. So I'm looking forward to see how bearishness is going to continue also in the NZDUSD. So let's check the weekly time frame. So here in the weekly time frame, so from our monthly fair value gap, we can see how price return into this open close price took out the buy side, and now we can see this bearish impulse to the downside. So from the daily time frame, we identify a fair value gap. So basically, based on the CTR, we have this weekly candle high and we have this weekly candle low. So we'll be looking forward to see how price will trade to the equilibrium, and then we can look forward to see the bearish possibility to the downside, looking at the sell side liquidity. So let's check the daily time frame, traders. So in the daily time frame, what we can see is how price mitigated the bearish order block we have here. You can see clearly price mitigated the bearish order block, which is within the monthly time frame bearish fair value gap, and we can see this bearishness to the downside. So we can see this is the down close candle that sponsored the bullishness here that took out this high point. We had this pullback, inducement liquidity, price pushed to the upside. Now price fell to the downside, leading to a change in state of delivery here, or we can consider a market structure shift, the swing low points. And here we can see also that price further continued to the downside, volume closed below the volume of this bullish order block that sponsored the bullishness that took out this high. So in the NZDUSD, I'll be looking forward to the return of price into the fair value gap to mitigate this bullish order block that was violated to the downside, and we can have the bearish continuation to take out the sell side liquidity. So let's check the 4-hour time frame. So here in the 4-hour time frame, what can we really identify that may sponsor our bullish return to the upside? What we can just see is clearly from the 4-hour time frame. Let's look at this. This is that low that price gave us. So basically we can say that price here is reacting at this candle week. Price reacted at this candle week, and now we can see the possibility that price may sponsor bullishness to the upside into the fair value gap we identify in the daily time frame. And we can see we have this fair value gap. So we could look forward to see how price will mitigate this sponsorship zone, and then we look forward to the models we're looking forward to see that would sponsor bearishness to the downside. So this is also my expectation in the NZDUSD. This is gold, and this is the monthly time frame in gold, and we know gold has been bullish for a long time now. So clearly now we can see here we had the down close candle that took out sell side liquidity before the bullishness to the upside. So if gold is going to drop to the downside, you'll be looking forward to see how gold reacts at this sponsorship level. So let's check the weekly time frame. So here in the weekly time frame, you know, last week I pointed out this weekly bullish fair value gap and told us to see how price is going to trade higher to take out the buy side, and then we'll take sell move to the downside now into the weekly bullish fair value gap. And clearly now we can see prices within the weekly bullish fair value gap, and we can see price respecting the consequent encroachments. So we are not saying that immediately we would see just price drops to the downside into this price level we identify from the monthly time frame now. So we could see bullish reaction here and price may trade higher and take out this high, or we could see bullishness and price may mitigate this bearish order block, and we have bearishness to the downside, because we can see here we have this engulfing candle. So let's check the daily time frame. So what we can see in the daily time frame is within the weekly bullish fair value gap, we also have a bullish fair value gap in the daily time frame, sell side liquidity. And you know, I took the sell move down to see how price takes out the sell side liquidity into the weekly bullish fair value gap, and we had this daily fair value gap. You can go back and check that in the previous weekly Forex Focus video. So what we can see now is, you know, we also took buy move in the Telegram community, and then we frame sell moves also. Basically now what we can see is we had this bullish movement that gave us this change in state of delivery here, because we had this bearish order block, but then bullishness violated that. Sponsored movement that took out buy side liquidity, and now we have bearishness violating this bullish fair value gap, now acting as an inversion fair value gap. So since we have price mitigating this bullish weekly fair value gap, and we possibly want to look to bullishness, then I would advise and recommend that we trade the bullishness to this level to help us determine if we're going to continue strongly bullish to the upside, or we could see reaction here that would begin to sponsor bearishness to the downside. So clearly, this is what I'm going to point out in gold for us, guys. So here we have this fair value gap. So we could see price trade, and we have price retest this, push into this, and then we could see price violate that and continue bullish, or we could now see price would return to the downside, and we can start framing bearishness to the downside. But you must understand that gold is bullish. Gold is what's bullish. So you want to be looking to the bullish perspective. But then since what we can see, we had bearish delivery. So we would have to also consider this inversion fair value gap, for the possibility that the market may give us bearishness within the zone and not necessarily just give us bullishness, strong bullishness to the upside. So this is just what I want to point out to us. So we have the both perspective. You can hold your position, trail your stop loss, see if price takes out the zone to continue to the upside, or we could just see price react here, give us bearish delivery to the downside. So guys, this is all I have to show us. Let's check the 4-hour time frame. So here in the 4-hour time frame, we can clearly see this is the daily bullish fair value gap within the weekly bullish fair value gap. We can see how price took out the sell side liquidity. Now we're seeing reaction to the upside. So here we had that fall. Clearly, if you're using a trend line, we can consider clearly this. So we can see that price took out the trend line, return, retest, and fell. So price may return into this. We had the drop, base, drop. So we could see price reaction here. Wait for to see the reaction of price here. Price is going to give us bearishness, or price may violate to take out the high. So clearly, if you're looking to bullish movement, then we could see price gives us a delivery like this. We could see the bullishness continue into this up close candle, and then we could see bearish reaction. We could see price push, and then we trade into this zone. So this is just all I have to show us, guys. So have a profitable trading week till I come your way again next week. Cheers, and God bless you all.